Good day, everyone. Earl here. Happy April Fool's Day. Hope all of you had a wonderful holiday weekend for those of you that do celebrate. We are starting off the second quarter of 2024, and it'll be interesting to see what kind of shifts may occur in the markets in these next 3 months. I'm going to review a trade that I took last night. Forex pair USD JPY. This is the pair of choice for me. I don't think I'll review any of the other pairs. Save that for another time, but I just wanted to share some of my lines of thinking on how I went about this last night and how I was able to stay in the trade. When you're running your analysis, it's especially useful to start at a very high time frame. In this case, I have the weekly chart pulled up. And we can see on the weekly chart, there's been some pretty dramatic moves. Now, I've got this high that goes all the way back to October of 2022 noted. We retested that back in November, and last week, we hit it again. You could say that this is a triple top. Now, retail would say that this is an area of resistance, but keep in mind, there's a high probability that there is liquidity resting above this level. And if you put yourself in the shoes of a bank, where would you likely go to grab orders before you drive price down? Now, when you're on a higher time frame like this, it's good to identify areas of where price came from on big moves. And so the most recent move, you had this big move here recently, and it came from this area. So I identified this down candle here. Before price moved up, I identified this as a demand zone, area of demand. We see price pulled back into this area and has gone up. What I've also identified here is the weekly opening price. So it's always good to do. Last week, we didn't have a lot of movement. It was only a short trading week, 4 days. Markets were closed on Friday for Good Friday. But you see there's just really not a lot of movement there. So now we got a question, is this accumulation to go higher, to push this to new all-time highs? Or are banks accumulating to drop this lower? We don't know. Lower time frame, weekly, 4 hour. Now, when I came to the market last night, put this into replay mode, markets were here. And as you can see, last week, this area here, we had this sudden spike, price dropped back into this range, and then it just went sideways. Really not a lot of movement last week. And this is one of those times where you can easily get chopped up and spit out because the market really hasn't decided on a direction yet. And going into last night, it was kind of more of the same. But one of the things that I look at in my trading is I look at where areas where prices come from, where is price likely to go, and I trade a very short time frame because my personality is such that I don't have the patience to sit around and wait for trades to play out over multiple sessions and days. I'm not a swing trader. I am a short-term intraday trader. But we can see that price came down from most recently this area here, and I highlight. And the reason you can see this big drop right here, and price came out of this area right there, and you see this green up candle right before it dropped. The body of that candle, that'll represent the area of most volume. Most volume occurred in that range. And that's why I choose just the body of that candle as an area of interest. So if price reaches up into that area again, I go down to the lower time frame and really start to look at what price is starting to do. So I have that noted as an area of interest. Where did price come from? Well, price came from this area down here, up, chop sideways, spike up, came down, now we're chopping sideways. So we're just in this area. When I drop down to the lower time frame, 15-minute, strategy that I tend to employ, which has become very easy for me, is just a simple retest strategy. Now, what you can see here is during the Tokyo session, which begins at 1700 Pacific time, or 2000 New York time. So it's really late for you New York folks. What I look for is a break of structure, a deep retracement, and then trade up through that recent high that's created. So we can see that beginning to play out here. Okay. So price broke above this recent high. So we have this range here. Price retraced, broke above it. It's retraced again into this area, and it's come back up. Now, it's not during session. It's out of session. So I'm not taking a trade. I'm not taking a trade any earlier than that. So that's beginning of Tokyo. But I didn't really see strong movement up here, so I waited. Price dropped back down into this area, and I waited some more. And as you can see, we have a deep retracement into this area. Now, I use the fib tool, and the level I've got labeled is the 705 level. And if you go back and test this, you may notice that this 705 level, when you have a range like this that breaks above a recent high and it pulls back, oftentimes on a lower time frame, so for example, on a 5-minute chart, you can see we've got a bit of a zone here, a little bit of a demand zone. So you can see how prices come back into that zone. Well, I waited till about 1915 for this before I executed the trade. And right there, I'm in it. And as you can see, price starts moving up. Now, my target is to clear this high up here. And the reason why I have this set a little bit higher is that covers the commissions. And I have this set a little bit lower than this low also to cover the commissions. I bake the cost of commissions into my total risk. So my total risk on this trade is 0.5%. And I took this trade on my Kingdom Wealth Funding trial account. Now, as price moves up here, I identified this fair value gap. Price has returned, accumulated more orders at this level. Price returned to the fair value gap, bounced out, and then entered a period of consolidation here. Okay. Now, I wasn't too worried. I did actually move my stop up to below this level. But at this point in time, when you see a big candle like this, I'm still not worried about whether this is bullish or bearish, because my last break is to the upside over here. The low that created this high, so this low that created this high, this low here has not yet been taken. Until this low is taken, I'm going to remain bullish. So price, tested that gap, continued up, came back down. Now, by about this time, it's 0200 in the morning. So New York time, this would be 0500. This time, I pack it in for the night and I go to bed. I move my stop to break even. I put it about 1.5 pips in front of my entry to cover the cost of commissions, and I just let it run overnight. And what happened was, and I had confidence in this trade because I had not seen any evidence that this was going to go to the downside. I saw this high get taken over here, this high get taken over here. I see a series of higher lows. I see that the order flow is in a bullish state. So I had confidence that this target would be hit. Now, hitting this target gives a 1 to 2 risk to reward. That's a 2x trade. Overnight, target gets hit. And I wake up into the morning to this. Price went much higher. And remember, on the higher time frame, this is that area of interest that I identified. And look what happened. Price came up into that area of interest where it had sold off before. And we have a reaction where price pulled away from that area. Okay. Now, I didn't set my profit target to up here because remember, I'm not going for the home run. I'm just going for a base hit. And a 2 to 1 risk to reward ratio is a base hit, and that's what I'm going for. What does this look like on my actual Kingdom Wealth Funding account? Okay. Kingdom Wealth Funding, we use GUI trade, USD JPY. And as you can see here, let me zoom in a little bit. Here's that low that creates the new high that breaks this high over here. Deep retracement to the 705 level. It kind of chopped around for a long time. We had a lot of accumulation in here before it finally broke out. Took profit there. And then overnight, as I was resting, price continued higher. But not to worry because my goal was only a 2x trade. Base hit. Here it is. This is my Kingdom Wealth Funding trial account. I'm currently underwater on it. It started with $100,000 trial. And as you can see, I had a couple of wins, a couple of losses, a couple of wins. Then last week, I was experimenting and took a series of losses. And last few trades, so this is that trade that I risked 0.5% on it, closed out over 1,000 minus commission, net profit $950. So $950, one trade. Do that a few times a week, maybe 2-3 times a week. And let me ask you, does that help improve your life? For me, it does. Now, in full transparency, I also have a $25,000 live account. This is an evaluation that I passed last year. I'll show you where exactly I'm at on this. If it will load. So I'm currently underwater on this account. I remember I started with 25,000. I need to get above that. But this is a live account. This is an account I can withdraw from. And last few trades, you can see the position sizes there. And last few trades have been profitable. My big account is my $300,000 evaluation account that I purchased when Kingdom Wealth Funding launched nearly a year ago. I am still in this, but I will show you. I'm very close to breaching this account. In fact, I'm exactly 0.75% trades away from breaching. I haven't done so well with this. And I believe a lot of this has to do with my mindset. These bigger numbers, you know, 0.25% on a $300,000 account is about $750 risk. I mean, that's a big number, just a 1-to-1 trade. You know, hey, that's good enough. But I've sized down, as you can see, considerably to not 0.25%, but like 1/8%. Still taking some hits there. So this is a psychological issue that I need to overcome. So not doing so well on the 300K evaluation account. I have to get this to $330,000 to pass. If this hits 285, I'm out. I lose it. But doing okay on the 25K live. And of course, my trial account, 100K trial account, which is here. This is for practice. I've gone back to this account to really practice more and hone the skills. And last few trades have been good. That's it for me. I hope this was helpful. Remember, we're just going for base hits. We're not going for these home runs every single time. If you try to go for a home run every single time, it may not end too well for you. If you get it once in a while, that's fine. But people, let's just go for our base hits. Hope this was helpful. Good luck out there. Good trading. And thank you so much for watching. And I will see you next time. Cheers.